you know. All right. Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders are discussed and tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither BillStockRoll.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. TSW provides education and training services that are meant to teach the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured we take your privacy very seriously, and we will not distribute or sell your information to anyone. Woo! By far my favorite part of the day. All right, now let's see what the markets look like. Hang on, let me get back to my chat session. Cool. All right, fantastic. And things are looking up. Cool. This morning we made a too early call, very early this morning. We were looking to try to get long off the 1,000 line. Didn't quite work out at first, but then we got a nice run, and this is good for over $1,000 already off that line. The S&P we played long at 1,900. That's down here. Same thing. We were too early in our first try, but right here we're getting a big winner. I mean, everything's moving along good. The natural gas contracts are, I'm still down $5,000. I have 10 of them long now from 196. I wanted to be heavy long down here, and I am. So we'll see what happens. This is the first day we've made any positive progress if it sticks, though. Oil, I'm sure, is a disaster. Let's see, CL. Oh no, 32.50. That's not bad. All right, so we're coming back off the line. We came all the way down to 30.50. Now we're at 32.25. That's a huge run. And we also discussed that was a good one. You know, when somebody asked me right around here if I thought it was still a good long, I was like, yeah. I mean, this is our bottom call, the $30 line. When you decide you're going to have a bottom call and you get a nice move down, that's when you start taking, especially when you see how it bangs right off that support line. So really fantastic to trade. Everything's good to trade right now, because now you can pick a lagger if you want. Let's see who's falling behind. The Russell is ahead of the pack. The Nikkei is behind. And, oh, wow, what's going on here? Oh, here you go. Slow, slow, slow. Oh, I forgot to mute the mics. Somebody's making noise. Hang on.
You are now muted.
All right, cool. Nobody has any questions. That's fantastic. I am the best teacher, no questions. All right. So the most behind is the Nikkei, but then if the Nikkei is behind, you want to check your dollar and say, why is the Nikkei behind? Well, because the dollar's weak. So that's a good reason for the Nikkei to be behind. Now, why is the dollar weak? Because people were panicking. If people were panicking, made the dollar weak. No, wait. Sorry. The dollar was weak because it was pushed down before, which was an attempt to boost the markets. As the market started falling, they pushed the dollar lower. It wasn't panic because nobody, you know, normally people run into the dollar, not away from it. And see how gold calmed down and silver calmed down? Boy, that was a nice run for silver. This drop is ridiculous. 1560 all the way back to 1530 and that's $50 a contract. That's a $1,500 move up and a $1,500 move down in the same day. Ridiculous. Here's Apple. Also nice chance to pick up Apple again. You know what went down really low that you can still get is FCX. Let's take a look at that one. FCX was my pick on Monday. I think, all right, here, just for argument's sake, let's take Nikkei long here. Still playable. All right, so we'll take the 15.7 line, but we're going to play this with tight stops. Really this time, okay? I always say tight stops and we never do it. So let's do 2. And ideally, I'd like to be at 15.7. So I'll take a little bit more at 690, but at 75. See this line here at about 75? Really want to pull the plug if we can't hold that line this time. And of course, we're going to expect the other indexes keep going higher. And that the dollar now, so I don't care about oil. I care about the dollar. And I want to make sure the dollar doesn't get weaker. So I want to see the dollar getting over 97.50, and that should make the Nikkei happy. So we have 2. I'm willing to go 4. I would add 2 more down here at 15.690, as long as it's not because the dollar's falling, and as long as these guys are still holding up. All right, so let's take a look at this for a minute. This is how you work into a futures trade. These are $5 per point, but you have to be aware of the fact that each of these moves is 5 points. So it's $25 per tick on this, because the ticks are 5 each. Not like the Dow. The Dow's, well, it is like the Dow. I'm sorry. The Dow does the same thing. The ticks are just wide, so it confuses you. So let's see what's happening here. 15. Now, on the one hand, I wanted to fill at 15.7, but I filled early, so I wasn't going to stick around. Here we go. I was going to say, but if 15.7 is holding too strong, that's just tough luck, and we won't fill the rest. So I'm not, even though it's tempting, I'm not going to be one of the 11 guys. See how because I'm worried about the fact that there's bigger numbers here than there are here. So I'm worried that it's going to put pressure down. And I'm not that confident watching these guys that I'm in the right direction. See, he fell to a 97.39. So we're still waiting to confirm that this thing's going to be a good move. I don't like the fact that there's 30, you got all these guys in the 30s here, and this guy's in the 20s. Then you finally start off, then we kind of match out a bit down here. But when you see big numbers here, a big block like that, that's not good. You don't want to see that if you're going the other way. You want to see this block get chewed up. That's a positive sign. See that? That's a good sign, because it went from 60 to 30 really fast. I mean, somebody bought all those, and now you've got a guy selling a big block up there, and that disappeared really fast too. So it looks like 15.7 looks like it's trying to hold. It looks like there's plenty of buyers at this line. So I was a little bit impatient. I should have just waited for it to hit that. But, and again, I wouldn't, by the way, I would not do that if I wasn't doing these webinars. We can't sit here for a half hour staring at things. That's the problem with the webinar. It's not a good habit. You really should just stick to your price and fill at your price. And if you don't get it, then find something else to trade. That's all. All right. So moving on in that case, we'll keep a general eye on the Nikkei and see if it can make a little bit of progress. What was I talking about before? Oh, I remember what we wanted to look at. FCX. Look what a round trip FCX had. They went up. Let's see if we can go further back. Yeah. We called it down here. We called it here, and then it went banging up, from the open. Now, maybe it's because we talked about it, but it went banging up on that day, up $1. It came all the way back down to lower than we called it, and now it's heading back up again. But we still love this trade. And that trade was from Friday. And let's see what that trade was. Oh, I'm sorry, I forgot to mention, there's 2 ways that we can average 15.7. We can either add 2 more at 15.690, or I can sell one at 15.720. Don't forget that possibility. And that will bring my average down, because I'm going to make 10, and I'm going to make the average back down to 15.7. So it's not like you only can average in. That's why I bought 2, because I was expecting it to go up higher. It didn't. So we'll see what happens here. But in fact, I'll put a sell in here, and we'll see if it fills. Why not, right? And if that fills, then our average will be 15.7, which is where we wanted it. That's a good demonstration of some discipline there. So here's FCX. And by the way, I cannot stress this enough at entries and exits. Okay, if you want to buy FCX, let's talk about our play. Our trade idea. Oh, it filled. Damn it! Every time I leave, it does what it's supposed to. All right. So now what happened? Now I sold one for $15,720, so I'm up. Well, I was up $50. Made $75 on the day so far, right on that sale. So now the one that's open, even though it says the average price is $15,700, you have to do this in your head because Thinkorswim doesn't track it properly. My net is really now $15,700 because I sold one at $15,720 on that pop up. So now I'm back to one at $15,700, and I'm perfectly happy. So now if it goes below, I don't really have the onus to add another one unless it tests $15,675. All right, and then again, everything else has to be looking good, and it doesn't so far. In fact, frankly, see how the Russell's breaking down here? Let's take another look at the dollar. And the dollar is not getting better. So I'm almost going to say basically this is a bad trade. Let's get out of this. And I'll show you we're going to get out of this trade. It's just not doing what we thought it would do. Boom. And so it's $25 profit in the end. All right, nothing exciting about it, of course, but the signs, this is the thing about trading the futures, okay? I wanted to see all the signs lining up. They're not. He's going down, he's going down, he's going down, and I don't want any of them to go down. Then why would I stay in this trade? So you take 25 and you go find something else to do. That's all. I don't want to be bearish right now, so I'm not going to flip on it, but certainly it's not doing what I wanted it to do. So moving back to FCX. When was that trade? That was Friday, right? I think it was Friday's post. No, it was Monday. Sorry. There it is. So we talked about Freeport. This is from chat. I think it was from... we had it in chat earlier than this. That's why. We had pre-market in chat. So we talked about the trade of adding the January 5 calls and the 5-10 spread. Now watch this. This is going to be a very important lesson for you guys. So we want to get the... we want to sell the $5 puts for $2.16. Let's see what's possible. All right, so we go to FCX. And we want to sell the 2018. I don't think it's going to be the same price now because it came back so well. But the $5 puts, they're still in the ballpark. Okay. So what am I going to do here? I want to copy. See this? I right-clicked on it. I right-click here. I'm going to copy the symbol. Got it? Then I'm going to go to Active Trader. And now I'm going to paste the symbol. Control V. And I'm going to paste the symbol. And look at what I can do now. I can see, the same way I see the futures, I can see the option trading. I can see exactly what I can do. So I can buy easily. I have this set up for 10 at a time. I could easily jump in and sell 10 of these. I have a buyer who's willing to buy 57. If I want to sell 10, that's an offer at $2.15. I know I'm at least I'd be the lowest offer. Okay, this trade's already done, so I'm not doing it again. So but if I sold here, I'd be the lowest offer. Right now, at the same time, because people ask me all the time about filling spreads. Okay, so at the same time, oh, silly me. What was our instructions? 20 FCX 5-10 bull call spreads. Okay. So at the same time, now we go and find the FCX. You go back to FCX. I get the $5 calls. And again, I'm going to copy the number. And I'm going to go back to Active Trader. And I'm going to use one of my Active Trader windows. And I'm going to paste that one. Okay? And now I go back to FCX. And I want to do the $10 that I want to short. Okay, and, whoops, silly me, trade, active, okay. And now I want to fill these in. So now you can see exactly what's realistic to fill. All right, so what was my intended prices? My intended prices were, I wanted to get $2.16 for the short. 315 and 125. So, could I get 315 right now? Oh wow, boy, it really did change though, right? It's all the way up to 410. So we have 410 here, but a lot more than 125. So that's okay because 315 and 125 was $1.75, $1.90 spread. So we're still going to get, in fact, you still get a $2 spread here. And you just have to find where is a real, not a buyer, but a seller. Where's a real seller? Look at that. Somebody's willing to sell 1,500. So I got no problem filling 20. Someone's going to sell 1,500 of these guys for that price. So I can then, I would be selling. I'm sorry, boom. My bad. I'm selling. So somebody's willing to buy 1,100 of these for $2.15. So I want to sell the 10s. I want to buy. Now, if I'm buying, I have to find someone who's selling. So I could buy for $4.20, and I can sell for $2.14 now. So as you see, so $2.14 to $2.20 is the spread. That's $2.06. Okay, so at the moment the spread is $2.06. Now you can make an offer, of course. It goes, as you can see, the range in the last couple of days has been up and down quite a lot, up and down like 70 cents. And the range over here has been up and down 90 cents. All right, so it gives you an idea of what's realistic that you can bet on, and you look at the range, and if you make an offer somewhere in this range, and you say, I'm probably going to fill this, and I'm probably going to fill that, and you wait and see how it goes. So when I talk about legging into a spread, this is what you can do. I mean, you know, I don't do this because I know what it looks like in my head. So I just sort of adjust the, you know, I can tell from the way it's trading, and I just adjust the money in the think or swim thing when I'm making my offer. But if you're, you know, but if you want to, if you understand the futures idea of how you get in and out of things, then you can easily do the same thing here. This is not a very liquid option, so it doesn't move very much, but a more liquid one, and you'll see it, you know, going like, let's say we want to do, for example, let's do Exxon. So if you want to trade the Exxon March 80 calls, right, watch how different this is. And we'll go to active trader on that, and we'll plug those in over here. See, they move like a futures contract. You see them jerking up and down? And there's 450 being, you know, somebody's willing to sell 450 here, so you can jump in and buy anytime, and someone's willing to buy 151 over here. So your spread on that contract is a nickel. And now you can watch. You say, okay, well, today that contract moved from 225 to 275. And if you think you're at the top of a range, you know, I used to day trade Exxon because it was fun. Because if you watch the oil market, Exxon almost always just follows oil along, whichever way it goes, or used to in the old days anyway. And then there are other factors. We used to have a thing called the Valero rule, where we'd watch Valero to give you a real indication of which way the energy market is going. But we get to that day, it doesn't work anymore, so we don't use it. Anyhow, but the point is, you can, you know, there are some things that are so liquid that you can just day trade the contracts and pick up 5 cents here and 5 cents there. And if you have a trading account where you have low friction, you know, where you negotiate the low friction cost, it can be worth it to do that. It's almost as good as futures trading, but frankly, now that I futures trade, I would never go back. NKD, that's what we were looking at before, right? Ah, look at that, went up. Let's say we'll watch the dollar, right? We're going to watch the dollar with the Nikkei. All right, so while I was talking, things got a little bit better. And here we'll keep an eye on the S&P. So you see the same principles that we use for futures trading, though, you can use to actually leg yourself into an option and see exactly what's going on. So it won't be, you know, don't feel like you have to be guessing at what's happening. You can see the action, see exactly how many bids there are and how many offers there are for each item. I mean, it's actually way better if you have, like, I have other screens. So for me, it's like I have 3 screens on my main computer, so I can dedicate my boxes a little bit easier than what we're doing here. All right. So that was our spread, though. This spread on Freeport, in general, you can still fill it for about the same net price. But our idea was we were going to sell only 10 puts for $2,100, right? Buy 20 of the spreads for a net of like 4,000. So we net into the thing for $1,640 in this case. And your upside is $5 times the 20 spreads is $10,000. So you can actually get $10,000 back on a $1,600 investment on Freeport. I like Freeport. Now, what happened to it is, it was doing great on day one, but then who was it? It was Citibank. Here's what Citibank came out and they said, here's my logic, right? In fact, the guy had to be reading my article before he wrote it, because I wrote they've got $300 billion worth of resources, and the Citibank guy comes out and says, not at these prices. So my logic was, in any time they want, they could sell 10% of their resources for $30 billion and pay off their debt, because they could sell the resources in the ground even at a discount. They'd be able to certainly service their debt or pay it down. The Citibank guy is saying, oh no, because in this terrible market, and he's got a point, they would sell it off for they'll only get 10 cents on the dollar. Now, I disagree with that. I certainly disagree with that. But the point is, they're not having a fire sale. They're not on the verge of bankruptcy. They only have to sell to meet their cash flow needs. They're not forced to liquidate. So they don't have to force and sell copper into a market that's not that interested. They'll sell what they want to sell, just like ABX did for the last 2 years. They've been selling off every mine that doesn't make a lot of money they sold, and now the only mines they have left have a net cost of extraction of under $800. They kept all the good mines and they sold all the crappy ones. And now their net profit on every ounce of gold is gigantic. It's the best in the industry. Which is what I was saying for years, is this is why you want to buy them. Freeport is in a similar situation. They're not as powerful as ABX because, they've got copper, oil, and gold, and copper is very plentiful all around the world. So it's not as good as ABX. There's not as much margin in the mines like ABX has. But they're still a good, large-scale, low-cost producer. They still have flexibility, and they've got plenty of money, plenty of cash flow, and they're not going bankrupt. So it's at a silly price. They're at $8.5 billion in market cap, and even if you did liquidate at 10 cents on the dollar, that pays off their $19 billion in debt and gives you a profit on $8.5 billion. The guys in Citibank came out and trashed the stock, said it's worth $4, and the stock tanked. It went right back down to where it was, but now it's coming back because that was stupid. And I'm sure he did it as a favor, because I think what happened is my article caused it to go up, and then people probably said, people probably called this guy, somebody who wanted to buy FCX and buy copper, probably called their, one of their pet authors up and had the guy write a nasty article to get the price back down so he could get back in $7. That's what happens when you call attention to a stock that's too cheap and it goes up, then people try to trash it, like lumber liquidators too. People try to trash it because they want to make sure they get all the stock that they were trying to buy. Somebody had been trying to buy lumber liquidators at 12 consistently, and then when it shot up, of course, all of a sudden rumors come out again about bad things with the cancer and all that. And honestly, all this stuff it's all so manipulated, it's just sad. All right, let's go through some questions and see if anybody's got here. VLO is popping. We did sell the calls in VLO. We got I think we're aggressively long in VLO now. Let's see. Butterfly, butterfly, butterfly. Short term. Look at that. 373. That's nuts. Wait a minute. Where were we on Friday? Friday? No, Thursday. Thursday is the last time we checked our portfolios. Let's see. Okay, who's that? That's the butterfly. See, Valero. What do we do with Valero? The short calls expired worthless, but the short puts at $10 in the money. So we rolled the short puts and didn't sell the calls. We'll hold off on selling calls. That's being bullish. We didn't want to sell calls because we wanted to get aggressively long. Meanwhile, we're at the short-term portfolio. Oh, that's weird. Oh, there it was. Okay, so they were 367% on Friday, the short-term positions, and now we're at what? 373. All right, that's still $6,000, even though we had a little pullback. Very nice. Okay, I'm pleased. I mean, we held up nicely considering. What do we have then? What the hell was I here for? Someone had a question? Valero. Oh, butterfly. That's why I wasn't looking at the butterfly. Or the short term. I was looking at the butterfly. So the butterfly, wow. So the butterfly, oh no, it's not that much. The butterfly portfolio is up a few $1,000s since Thursday. And one of the reasons is Valero. We called it very nicely because now we are long Valero. We only have the bull call spread. You know, remember we sold our short puts. I'm sorry, we sold our long puts when they were down. See if I can get that straight. we sold it, so confusing. Control F BUTT. There it is. That's in the butterfly portfolio. No, that's not what I'm talking about. All right, butterfly portfolio update. Right. So the first thing we did was we sold our 10 January 65 puts because it was on Thursday. It was stupidly low. You know, we didn't think it would last. So that was a nice time to sell it. So we had fantastic timing basically. So we sold the 65 puts. And that left us, and then we sold more June 60 puts. We rolled the puts that we were behind on, and we bought back the calls. So that left us net. Long. So now what we have is effectively just a bullish play. We have a 55-70 bull call spread, the short 60 puts, and we're just basically going to wait and see if we can. You know, see if it pumps up nice and high. 250 in a day is pretty good. What's that, 5%? So move 5% today. But if it goes up to like 65, we'll probably sell more calls again. But right now, we're thrilled because if this thing holds 60 into June, we're going to pick up the entirety of this $10,000. All we have to do is hold 60 into June, and we make $10,000 on this. Plus, we're bullish on this spread. So it could become a huge, huge winner. So the answer to this question is you should be doing this stuff when you don't do it after. I see. You're saying should we sell calls? So yeah, it popped, but in the grand scheme of things, I don't think this is a VLO. Don't forget the summer driving season. People, the summer driving season. We're going to have Memorial Day eventually. This is a super low. Here we are. This is what? Today's Wednesday. So here's Wednesday. This was Tuesday. Here's Monday, and this is like Friday. I don't know. Maybe I have my dates mixed up, or maybe this is the date. Maybe this is showing me. Oh yeah, it's probably a day behind. Oh, these are weeks. That. Boy, am I dumb. Wednesday, Tuesday, Monday, Friday, Thursday. So here, when we came down on Thursday to the 55 line, when we were doing our webinar, when I was updating the portfolio, that's when we got bullishly aggressive because we were happy with this line. I figured it was going to hold and did. And we went bullish. But I wouldn't see here, you can see all the way up to 62.50, you don't have much resistance. You do have some really serious resistance up here, though, with the 50-day moving average coming down. So at that point, I certainly would want to lock in the gains we're going to get off our 60 puts and sell some maybe 65 calls. Well, I don't want to do it now. I think it's way too early now. We're only just crossing 60, and I think we're at least good to 62.50 plus. And frankly, probably what's going to happen is that we're going to consolidate here, because these low oil prices, as long as oil prices are staying this low, they haven't had to capitulate on gasoline prices. There's no consumers in America that are cutting back on their driving habits because the price of gasoline is $1.50 a gallon, or even if you're in California, it's $2 a gallon. Nobody's not driving because gasoline is $2 a gallon. Okay, and in foreign markets, where they're exporting the gasoline, they're getting more than $2 a gallon also. So the refiners are having a really good time. And frankly, it won't matter. It doesn't matter. If they make gas $1.50 or $1.10, they're not really going to sell more gas. So there's a certain inelasticity to the pricing now that you've gotten to a point where people are not concerned. Now, once people are super used to it, you might have a little bit more pricing elasticity comes in. But at the moment, the price of gasoline now is so low that, you know, people are driving as much as they want to. Have you heard anybody say to you recently that it's like, oh, I take that trip, but gasoline is so expensive. You know, it's not a thing anymore. All right? So, you know, it's like, oh, I might drive, but, oh, I have to fill up my tank twice. It's not an issue anymore. We went from $3 2 years ago to $2 last year, and now we're just about $1. You know, here we are $1.25. You know, they add on at the pump, but still. So we're at $1.25. This is nothing. Oh, somebody asked yesterday if it was really going to pop from $1 to $1.25 on the contract rollover. Look what happened, right? Look at that gap. That was the old contract. That's the new contract. So now it could probably work its way down a bit, but the refiners are thrilled to get that money, and that was the mistake people were making. They were looking at the old contract selling off and thinking that was going to be a permanent thing, but it wasn't. It snapped right back. That's why you got to be aware of your future strip. All right. Can you comment on the relationship between RBH6 and G6 ladders 25% higher? Yeah. Okay. Well, it just so happens I just commented on that. Yeah. I mean, because it's a matter of they had too many contracts. There were too many bets were being placed on gasoline making a comeback in March, and that didn't happen. And by March, I mean the March contract. So the March contracts, so you get down towards the end of March, and all these guys are stuck with these contracts, and they're like, oh my God, we're never going to be able to sell these things. And so they roll what they can, but that caused the price to push down lower than it should have, because they had to get rid of the contract. Especially because we're out of storage. And oil too, by the way. Oil shouldn't have gone down to 30. That was too low, but the contract pressure pushed it down. It wasn't a supply and demand thing. Nothing changed supply and demand-wise. What changed is the contract pressure pushed it down. Then the OPEC talk pushed it up, and that also had nothing to do with supply and demand. So then you drift back to where you should be, which is right around $32.50. That's the correct price for now. In the summer, the correct price will be more like $40. And that's based on just simple, I think not simple, but on basic fundamental supply and demand, which is the only thing I give a good goddamn about. Everything else is noise. And you've got to learn to separate that, and that goes for stocks too. Your stocks have fundamentals. How much money does a company make? How much money does it owe? How much cash does it have? What kind of debt service does it have? What's the cash flow look like? Those things don't, they change, but I mean, they don't really change day to day. Only people's perception changes day to day. If new facts come in, you have to adjust your outlook for something, but the new facts are facts, not rumors. When rumors come in, you don't change your stance. And this is really the whole secret to how we make money. We pick stocks or commodities that we understand the price of, which I don't want to go back to Levi's jean thing. I should make a video for that one so people understand this. That way I can always refer to the video. But as I often say, a pair of Levi's is $50 in the store, but you can get it for $40. It's on sale at least once a quarter, probably more often, probably almost. It's every other time you go to the mall, they're on sale. So $40. So why would you buy it for $50? Even though it's worth $50, it's worth $50 to you. But you can get it for $40, so you wait till it's at $40 when it's on sale. That's when you buy it. But then when it goes down, if you go back to the store a month later and it's $35 or $30, you don't take the ones you have and throw them away because they have value to you, because you know what they're worth.
It doesn't help you to buy, you may not need to buy more or whatever. You got your jeans, you're fine, because you're going to use them for years. And if you buy stocks with the same attitude and they have value to you, and by use them in stock, I mean you're going to collect dividends, you're going to sell options against them, you're going to have a cash flow, you're going to have long-term appreciation. If all that stuff is in there, what do you care what the price is day to day? It might make you feel better to say you got the $40 jeans, you go in the store and it says 50, and you go, whoa, I got a deal. But you know what? When it goes to 50, do you think it's going to go to 60? No. You know it's going to go back to 40 because you know the range of the price of the jeans. Okay? That's no different than stocks and options, except the thing is people tend to trade stocks and options and commodities that they don't understand. And then you're just flailing around. And then anything anyone says to you, you clutch at to say, oh, this guy must know what he's talking about, because you don't. But if you stay away from things if you stay away from the things that you don't understand, you won't have that problem. And don't ever think you don't understand stuff. I mean, even if you're a waiter, you understand restaurant stocks better than most people because you worked in one and you understand how the processes work. And from that, you understand some other things. Then you realize you understand a bit about the shipping and you understand a bit about the retailing and so on and so forth. Everybody has experience in something. And from that, you can build onto other things, but stick to what you understand. Then you won't have to worry about these things because, same thing to gasoline. You say, what's the difference between one contract and another? Well, one contract's longer. The longer-term contracts, there's a whole huge amount of things to talk about as to why contracts change and what the pressure is and how it works and the seasonality. And the refinery turnarounds, by the way, is another thing. When you get into this particular month in March, the refiners begin their spring cleaning, essentially, and a certain amount of refiners come offline, so you're almost guaranteed that there'll be less supply in this month than there is usually. All these things are factors, and we had a drawdown in gasoline, in fact, today in the oil inventory report. So all these factors come into play and make the contract change from month to month. But if you don't know that stuff, you shouldn't be trading contracts. You gotta learn these things and know it and understand it. You can't look at it like it's some random event. It's not. There's damn good reasons these things happen. What do I think about Ford? We just picked a Ford play last week. In fact, I think we picked a couple of Ford plays last week. The only problem with Ford plays is I can't refer to them because if I try to do a search for S, it searches a letter S. It drives me nuts. I wish I knew what day it was. If anybody knows, please tell me. But we had two different Ford plays last week, but it's, nothing abnormal about it. It's the same as we usually do. Let's see what Ford looks like. Yeah, there's some stocks I don't like to play just because I can't search them. And Ford is one of them because if I search for S, it picks up everything with the letter S. And it doesn't work with capital and stuff like that. So anyway, Ford. All right, so it's still at the price we liked it. Last week it was down here, and I was like, oh, this is crazy. And the VIX was a bit higher, so maybe this isn't as good of a deal as we saw last week. No. But nonetheless, still a great deal down here. And if I was going to play Ford off today's prices, all right. Well, see, with Ford, we went for the dividend. So you want to buy the stock for 12. Then you could sell the 11 cent. I wouldn't even be conservative with Ford. I think I'd be very happy with this. I would sell the 11.75. So if you buy the stock for 12 and you sell the 11.75 puts and calls. So these are 225 and these are, let's say, 175. Well, all right, these are 170. So 225, that's 295, 395. So you take 395 off 11.95, and then so you end up paying $8 net into Ford. You're going to get called away at 11.75. All right, now if you get assigned, you'll end up owning 2 times, but the 2 times you'll get assigned 11.75 and you own it net 8. So you'll end up being a little bit under $10 net for 2x. So that's your worst case scenario is you net into Ford for $2 less than it's trading at now. That's your worst case. Your best case is you're going to get called away at 11.75. That's a almost $4 profit from where it is now. Plus, you'll collect these bitchin' dividends, which are what? A 60-cent dividend also. So that's a bonus. So on your $8, you're getting 60 cents back. That's a 7.5% dividend. So, figure you missed the first quarter, so you'd collect 45 cents now, $1.05 plus $4 is $5.05 off an $8 investment in 2 years. Doesn't get much better than that. So you're either going to make, so if it's above 12, where it is right now, if it's above 12, you'll make $5 on an $8 net cash outlay. Okay? That's fantastic. If it's not over $12, you'll own Ford for an average of 10. So you won't lose money. Oh, actually, it won't be an average of 10 though, because if you get the dividend, you're getting $1, you'll get $1 back. Your average will be 9. Assuming assuming they don't cut the dividend, which would be probably the main reason it goes down. The main reason it would go down below 10 is because they cut the dividend, but none of that's likely, of course. So this is a fantastic trade. I can't possibly recommend the trade better because that's a fantastic trade. So all you're doing is selling 11.75 puts and calls. That brings your net down to $8. Okay, so you're in for 8. Your worst case scenario is you're assigned another batch at 11.75. That would make your average on 2 times below about $10. But you're also going to collect $1 in dividends over the time period between now and January 2018. So your net would be 9. That is your worst case scenario is owning Ford for 9. Your best case scenario is you make $5 back to every $8 you put into the trade. I mean, frankly, you could do that trade and go fishing for 2 years. I mean, that could be it. That could be your whole portfolio. It seriously is. It's like a trade. I would probably say if I was going to make one trade, that might be the one trade. The only thing is you do have that slight risk of something going wrong in the overall economy and people getting spooked. But wow, I don't see it. So is it a good time to add a position? Yeah, based on those numbers, I'd add a position. If you don't have it, it's worth getting. We have, I don't know. We probably don't have Ford in the portfolio because of that. Because I can't. It's unsearchable, so I don't like to play it. TF at 10.10. Do you like it long? Well, I like it long at 1,000. We do like it long at 10.10, but very tight stops because it's such a crappy day. Did the oil make its run going to 32, 35 earlier and 32 now? Where is it going into the finish? As if I know. Let's see. Where is oil? It's not on this list. All right. So first of all, dollar flatlining here. So dollar's not going to be any help. S&P flat. This is now you can't play. See when you look what's going on. The guy who asked about the Russell. Look what's going on. Rejected at 1910. Okay, so that's not a good sign. You have to look at your other indexes. Look, rejected. So no, then you don't play 1010. Now it's a negative line. If anything, you play it short here. We got rejected harshly at 1010 before. So now you want to be very, very careful. There's nothing, unless everybody else is bullish. This is why we play the laggard. So if I was going to go long on a break over 1010, I'd look at the Dow because the Dow is down 0.77 today, and these guys are positive. So why would you go long on the thing that's positive? And the Nikkei is still down 1%. The Nikkei is still a good play. But it's a good play if the dollar went up and if the other indexes went up. It would be a good play to follow through, but it's not happening. So basically the best thing to do in a case like this is don't play. There's nothing clear. There's no certain reason to do it. So don't play. And if you don't play when you're not sure and you only play when you're sure, you might be right more than half the time. That's how you can improve your trading 100%. Is like don't play when you're not sure what's going to happen. And also, I'm not really looking at the news, so I don't know what's going on as far as breaking news in the most recent time. Let me see. Seeking out is broken. All right, there it goes. All the solar stocks are doing good because First Solar had nice numbers. DreamWorks up huge. Banks not performing well at all, but I think they're viable down here. Certainly XLF is viable. That's another good one to play. GE, wow, GE is getting hit. I'm almost ready to buy GE again. Chesapeake, wow, Chesapeake 21% up today. Honeywell, nope, nothing going on. All right, so there's nothing going on. There's no particular catalyst. So in absence of a catalyst, I would just watch the levels. I want to see 4150, 1010. I'll take 1905, and then I would go long on the Dow at that point. So if everybody's over their lines, I want to see him. I want to see him over 4150, and I'll pick up the Dow to chase. So probably the Dow over 16.3 would be the play. If I wanted to make a bullish play, which frankly I'm not particularly inclined to do, although the weak dollar will help, boost the markets. But oil's iffy, it's kind of hanging out here. Natural gas is there, gasoline there. There's nothing particularly that I see that would boost the market, but let's see, Apple's over 95, so that's a good sign. You take what you can get in these cases. Chirac's just always writing forward. Yeah, that's not going to happen, though. That's a great suggestion, but I guess if we play it, I could do it and try to remember. And write forward. It's so contrary to my nature. It's a good idea, though. Okay, you're right. We really should play it because it's such a good play. But I always just hit the symbol, so I type really fast. So it would just be such a thing in my thought process to try to remember to do it. In the chat this morning, you mentioned buying back the March TLT puts in the OOP. However, the latest review chart shows 5 long TLT. It does? What? Wait a minute. I mean, the latest review, this is the latest. So, what do we have for TLT? Okay, now I gotta read the question again. Buying back March TLT puts in the OOP. Okay. Do we still have March TLT puts? Yeah, we do still have them. So these are the ones I was talking about, these March 22 puts. So I'm not sure. Latest review chart of February 11th shows 5 long TLT. Oh, I see what you're saying. What are these? These are long. Oh, I get it. I thought they were puts. Yeah, you're right. Nope. Okay, so I'm sorry. Yeah, it's my bad. I thought they were puts, and I was like, well, why don't we buy them out in case it goes lower? No, there's no point in buying them back. That's my mistake. There's no point in buying them back because they're calls, and we just hope they become worth more than a nickel. It'll be tough to get $10 move at this point. So that's my mistake. I thought they were puts, and I thought they are puts, but I thought they were short puts. That's that's what I meant. I saw put, and I'm like, oh, we sold puts, and I was like, oh, we should buy those back. So I'm sorry, that's my mistake. What are your thoughts on FTR long term? Oh, I don't like them anymore. I've lost interest. It's not that I don't like them. I totally lost interest in FTR because they had their run. We liked them when they were super duper cheap. This is Frontier Communications. They're a regional phone company. We liked them back here, and they ran up to 8 from like 4, and we got out, and that was it. I lost interest. Now, I mean, maybe back at 4 they were good again, but I'd have to look at them, because the reason we liked them last year or 2 years ago was because they got these contracts, these very lucrative contracts, to supply rural areas with phone service. So in other words, the government paid them money for each hookup they achieved to do it. So essentially what they got paid for was to increase their tower base and service underserved areas. They got paid money for that offset their costs. And then by doing that, it gave them bigger and better coverage, so it was a good deal for them. So although it was a big cost expense back here, and people were hammering them for spending all this money on infrastructure, the fact is they got the money back, they got new subscribers, they're the only ones servicing this area, so these guys, the subscribers they added are going to be super loyal. They don't have nobody else is going to come along and do it. Who would go and put towers out in the same place and say half of those customers? Wouldn't be worth it. So they get all these great new customers, and they're going to be loyal, and they get offset pay. It was a great deal. Anyway, so I like that. It ran up, and then it went down, and they lost interest. So I don't even know that I still like them. I certainly wouldn't chase them now. At $4, if you would have asked me at $4, I would have said I probably like them. But now they're like $5.25. I'd have to really consider it before I jump back into it. I wouldn't. I mean, frankly, I wouldn't, because my thing is once I buy a stock for $4 and then it goes to $8, and then if I don't catch it back at $4, I'm not going to really be happy to go back in, because it's like the jeans, right? It's like I paid $4, I don't want to pay $5. Any thoughts on Harmony? No, I like Harmony. I mean, they're good. They're a good miner. They're obviously much more of a gamble than ABX, but there are various reasons that they went down, and part of it was the South African, the rand was a terrible. The rand currency was terrible, and although that gives them a lot of rand per ounce of gold they sold, as far as the stuff they have to buy and the deals they have internationally and so on and so forth, it was killing them. So I was banging the table on Harmony when they were down here. Now I don't care. We're out. I mean, for those of us who had it, took this money and ran. It got all the way back to $3. It's like, holy crap, are you kidding me? So yeah, I liked Harmony. I loved Harmony at 50 cents. I loved it at $1. I loved it more at 50 cents. At $3, I could take it or leave it. I mean, that was a great run. It's still good. I mean, frankly, if gold really comes back, it can go to $10. But now you're betting on gold, and if I'm going to bet on gold, I'd rather bet on ABX. If I'm going to put big money down on gold, ABX isn't cheap either, but it has a better overall picture in a decline than Harmony does. Harmony can go right back to 50 cents if gold crashes, and ABX can go right back to $8 or $6. But I still would rather hold ABX when it's down here and be in it than ride Harmony all the way back from 3 to 50 cents. Obviously, actually, and also look at ABX. ABX is nowhere near where it was. Harmony's already back at the high, so ABX still has a way to go. And by the way, part of that is the weight. Like the market cap of ABX is, I don't even know what it is right now, but the market cap of ABX, $16 billion. The market cap of Harmony is $1 billion. Okay, so ABX is like 14 times, 13 times bigger than Harmony. So therefore, it takes 13 times more money to move ABX up 1% than it does to move Harmony up 1%. So that means anybody who just, if somebody notices Harmony is cheap and throws $1 million at them, it has a huge impact on the stock. If somebody throws $1 million at ABX, it has a very limited impact on the stock. All right, so that's what happens. That's why these junior miners will take off like a rocket in a recovery, because they'll look fantastic, because it doesn't take much money to move them up. It also doesn't take much money to crash them going the other way. People get a little bit nervous and they crash like crazy too. Now, if you want to get the sleeper, my sleeper one is NAK, big gamble. They're at 36 cents. NAK is not, NAK is in a lifetime fight with, the environmental department in Canada about whether or not they can even open their mine or do stuff, and whether they've got the right water levels and blah. It's taking like forever, but they are sitting on such an incredibly huge deposit. Gold, copper, moly, everything. They've got one of the world's largest unmined deposits that they own. And the poor bastards have been sitting there for years, just unable to start mining operations. I think one day it'll happen. So I like them as a sleeper. And they're like on our accumulate list down here. When they're under 40 cents like this, they're definitely on our accumulate list. But it's a pillow stock. It's the kind of stock you just, you buy $1,000 worth, and one day it'll either be worth $0 or $10,000, and you just have to kind of ignore it and just see what happens. It's not a serious investment. It's just a fun gamble. This thing, if they ever do begin operations, this thing will go up to, it could be easily $10,000. It could be easily $10, not $10,000. I mean, easily it's $10, which is up like 30 times from where it is now. If they ever actually start mining it. But the issue is not the mining per se; it's the runoff that's the concern. It's the rivers in the area in the water table that they're worried that there's no way that NAK, and they can't because they're too small for one thing. They already gone partners. There's no way that NAK can guarantee that they can run a clean enough operation that it won't contaminate the water table. And they've got salmon up there and all this other stuff. So, so there's plenty of opposition to them doing anything. And that's what this is all about. So it's very interesting. It's a fun thing to read about and follow. But also it's fun for the stock. Because, I mean, hell, it's just... there's not many situations in the world where you have incredibly valuable resources that are never tapped. That even looks like Anwar, right? Even look how many years, decades of trying to get them to open up Anwar and tap it and whatever. And bit by bit, the government gives way. Even in the North Pole now, they're like starting to drill for oil in the North Pole. There's no place that the money people won't go to make their money. And they'll fight the fight forever because it's worth fighting, because the money to be made, it dwarfs anything they're going to spend on the on politicians and elections and so on and so forth, and bribing judges and whatever it takes. And money people are patient, and they'll chip away and chip away and chip away until finally they win. And they only have to win once, and they can open up their mind. So so if you're going to bet on the money guys to win. Bet on what they call progress to continue. Even if it's terrible for the environment, you can still expect somebody to pull it off. Let's see, 50R, Harmony, and Rick says, haha. That's it for you guys. No questions. All right, fantastic. Let's see what's going on in the market. So, everything's looking much better now. Okay. So now, like I said, now the Dow is lagging. Everybody else is ticking up, but Nikkei would be my favorite, as usual. Oh, I hit the wrong button. So we're back in Nikkei. We're back at 15.7. We can give it another shot. Once again, I wish I had caught it a second ago. So what am I doing now? Now I'm going to watch to see if any of these guys creeping up or creeping in. See at 139? That's a lot of sells. It's dwarfing the 82. 150, 161. So you want to see who's winning these wars. See now, he's getting chipped away. And we go up. You can see it's about to happen. 57, he's getting knocked away. Up, surprisingly, not up. So and now that means somebody's being stealthy here. See, there you go. When you see, oh wow, look at that. So you see that? You look at these things, they made me hesitate because I wasn't sure how the action was going. As soon as you hesitate, you realize, oops, not the best time to jump in. There's imbalances. There's somebody stealthy selling. He's 48. Now, see, he should go down, yep. 137, 189, but he gets chipped away really fast. That means still downward pressure. Now, you see how it stays at 163? It means somebody's being very stealthy here and only adding when they get some sales. And now we pop back up. Might have finally gotten rid of that guy. Oh, and that happens too. See, finally you get rid of a guy, and then all of a sudden, the guy who was stealthy selling, he had a lot, but he's gone now, and all these other guys are just filling like normal. So 200 goes, and the next one goes, and the next one goes. But you want to see a pattern across several of them, not just one, and see what people are buying. So here's 15.7 dead on the money. I can take this one at 7.05, but I think we can do 15.7. See, 6 and 6. 12 and 30, but going the wrong way. 19. Oh, see, somebody's fishing. Nope. See, they're fishing for a buyer here. Somebody wants to sell. They're willing to drop, but they keep wanting to fill that one spot. See this? Watch. One. We'll take it. And it didn't fill. Let's see if it fills. Where's my order? Well, that's pretty weird. Buy one at 15,705. Okay, so it didn't fill. It's one of these 12 now. And as soon as I put that order in, they stop. See, they're fishing. They're pulling. So I'm going to take my order away. So now, unfortunately, probably got away from it. We'll take a look and see what happens. See, the dog's back over 40, so the Nikkei's going to like that. And then, by the way, so now if that fails, then I could look at my next lagger. I look for who else is it. I look to see if the Dow maybe is in better shape as far as having a support line. Remember I said it's going to be 16.3? So if the Dow gets over 16.3, I still got plenty of time to get into that. So I'll still watch the Nikkei in case I get a little bit of a dip. Here's where the Russell had trouble. You see this purple line, 1150? So you want to see the Russell get over 1150. Once it gets over 1150, then we're going to be in pretty good shape. And it's plowing up there. Look at that. Oh, yeah, clears it. So we're going to do Nikkei or the Dow. Don't fail now. Come on. You can do it. Nope. Nope. Ultimately rejected. So much fun. Okay. But this is how you should trade the futures, by the way. You don't trade. You watch it until you're sure what's happening. And then you pick one that's falling behind the rest, and you say, ooh, he's going to start catching up. Right? I mean, sometimes you make a fundamental call on a floor, but then you want to see he's catching up. 11.7. He's coming up. I'd love to see him clear 10. Now, instead of watching the dollar, because we're probably not going to care about the Nikkei now, we're going to go back to the Dow, which is YM. And, oh, I missed it. Oh, bastard. Ah, I can't believe it. All right, let's buy one there. Oh, they do go in ones. All right, so now I'm in at 06. See, the Dow does go in ones. I thought it did. The Nikkei is the only one that goes in 5 like that. So on Dow, each point is $5. On Nikkei, each point is $5 too, but these are $5 increments. That's why it gets stuck. That's why it appears to get stuck so long, because it has to clear 5 points before you see the move. The Dow, on the other hand, every point it jerks up and down. So it looks crazy. Look at that, $35 in how many seconds? Out of principle, I should take that money. But no, see the line on the Dow? We're, oh, well, that's really like 305. So really, yeah. Go to the Nikkei, 15,750. So everything's looking good here. $110 we just made. That's one contract. Oh, there you go, $135 now we made. Oh, and look at these guys go. Holy cow. Any of these things would have been winners. How much now? 125. Should we take it? Let's take it, Claire. Let's look at some other stuff. There you go. $140. Not bad. Not bad for 5 minutes work. See, and this is what I mean about patience, though, because you can do this stuff all day long. You find a floor, you read the news, you see when something's turning, you listen on CNBC or Bloomberg and see what the sentiment's looking like, and you pick a spot, and when everything is right, you do it. And you don't have to sit there all day. What you have to learn is that you sit down when you're in the mood. All right, I'm in the mood to you know, it's like sometimes I sit down, I want to play a computer game, I want to shoot people, and I sit there and I shoot people for 10 minutes because I'm in the mood to kill somebody. You know, but it's what I'm going to do because I feel like it. Now, when you're trading, it's the same thing though. It's because I feel like trading, so I'm going to sit down and focus on trading for X amount of time. But don't make it a job. Okay, don't turn it into a chore. It should be something like, I feel like trading now, but you got to sit down and don't force yourself to trade. Say, I feel trading is looking for a good spot to trade. All right, that's all it is. You got to find a spot, and sometimes you'll find it, and sometimes you won't. You have to accept that that's part of the whole game. All right, so then you go back, so now I clear my head, and I say, okay, I'm out of that one. I took 140 bucks. Where's my next lines? Oh, look, 1015 on the Russell would be a great line. If it goes higher, then I want to get back into somebody. And I'm looking at the Nikkei is still way behind. The Dow is still behind, but nowhere near as behind as it was. The NASDAQ's turned green. If the S&P turns green, either the Dow or the Nikkei become a good play. Apple's coming up. That's nice. Oil is not doing anything. We're not going to care about that. Natural gas don't care. There's nothing else really I'd want to trade right now. How's gold doing? Gold's going down, of course, because people are not excited about it down here. But I'm thinking this might be a little bit toppy, so I'm not really too keen on chasing this or trying to make something of it. And again, that's it. What I do is I say, ooh, let's see how the futures are doing. I'll be sitting on my couch and I'll look at this chart basically, and I'll say, no, nothing tradable at the moment. You know, so I'm sitting on my couch, I'm listening to Bloomberg, and I say, oh, something happened. Let's see how the futures look. Oh, look, here's a good opportunity to get in. That's when you want to get in. But you know, if you come back and forth, it's like it's out of 4 times you sit down, maybe one time you'll find a good play. But if you have that discipline, that one time you can almost always make $100, $200, and go boom. So you do that 3 or 4 times a day, and you're in great shape. Disc 3 times out. Don't know what that means. Anyway, all right. So what do we make today? So we made 140 plus 25. That's not so bad. You know what's funny? I just did the what do they call it? The Traders Expo in New York, and I asked her. She said I can do it next time. I don't know. I'm still kind of leery about doing this like that. But I said, you know, we could do this. It'd be like the most exciting Traders Expo ever. We can just show them how to make money in the future, like live, and actually show them the trade. Because you know, these presentations are so god-awful dull for most people. I mean, it really is terrible. You just sit there, there's no practical application. They talk about what you do here and what you do here, and it's all PowerPoint. And I'm like, why don't you just show live trading? Why don't you know, show them what's good? Oh, here's 1015 being tested. So let's see. Okay, so given that we'd like to trade something, here we go. So 16,350, if 1915 and 1015 and 4170 are popping, then these guys should be good at the, well, I think he's better. I think the Dow's going to still be the better one to pick. Because you know the Dow, that can easily head up to 16.4 really fast. So let's do that. Yep, we're making it. So, I keep doing that. Yeah. All right, so where were we? The Dow, we said? Yeah. All right, so watch. So 16,348. We want 16,350 to be our stop, basically. So we'll put a couple in right now. See how that goes. Oh, good. 16, very nice, very nice. So let's see what happens here. All right, now, I bought under 350 at 48. So if we get back to 350, we can use it as a stop. Don't fail now. Come on, boy. It's 780 here. I'd love to see him over 800. That's what you do. You start watching everybody around and see how it goes. Not getting good action on the Dow. 1450, 16.3 though. Everybody else is looking good. There's no excuse, Mr. Dow. But if you don't like the way something's playing and you have too many contracts or whatever, now watch this. See, if I sell this guy, if I sell him, I'm going to drop my basis even lower. So that means the next one I buy on the dip, here we go. Let's sell one here, watch. Oh, come on, really? Oh, well. It'll fill. 780. Everybody's making progress. So what I was going to say anyway, so if he fills at 350, you have to keep track of this. Thinkorswim does a terrible job keeping track. If he fills, my basis drops to 46 on the one that I have. And now we're even below 46. But these guys are still going up, so this is an incorrect move on the Dow. It makes me more inclined to buy more than to sell. So I'm targeting a basis of 46 on 2 at the moment. There it goes. See, now my basis, even though that says 48, my basis is 46. I don't want to own 2 at 46, though, so now if it goes back to, well, I don't have a definite plan, but let's say it goes back, oh, look at this. Boom, 44. That's tempting. 43. Let's say 42 I would buy. Okay. All right. Now I have 2. I bought, and now I can pick up. Oh, that was so easy. Look at this. Wow. So now we're up 175. My basis is at least down here. So I can set a stop at 45 now, and I guarantee to lock in some more profit. So see how easy that was? You just watch it, pay attention to the little channel that you're building, pay attention to the other things. And as soon as you don't like the way it looks, just get out. It's a nice profit. So 1650 is causing trouble, so let's take that and run. There you go. And now we got up to 175. You know, plus we made, what, 25 here. So we made $200 during the webinar. That's not so bad. And I have no particular reason to get out. It's just the Dow's very choppy, obviously. It's having trouble getting over to 350. So I can get back in now at a lower price. There you go. Let's take 46. There you go. That was easy. Too easy. Plus I don't like it when it fills that easily, right? It's not good. But now I'd like to get my basis down to 40. So if I buy another one at 40, we'll see what happens. I'm still watching these guys, though. He's at 16.6. He's not making 19.15. I don't like that. He's, of course, having trouble at 15. You know he's going to have trouble at 15.8, so that's not even a question. So what I said, I want to buy another one at 40. I just forgot, right? Here it comes. Great. Now we have, see, now I have 2 at 43. And I can set up a sell immediately. And if that fills, my basis is down around 1640. So I can see the Dow's popping up and down, moving up and down. That's going to give me a lot of opportunities to get in and out of these positions. Here it comes. And I'm watching him. He's getting rejected in 1915, but that's probably not because it's weak, probably because 1915 is a place where people are going to take profit. He's doing okay. He's doing okay. Got 2. You got to keeping your head where you're at. Now you want to take a look at your other stuff and see how everybody else is doing in case you're watching the wrong things. He's okay. He's okay. 4170. See, he's having trouble with this pink line. That's not a bad thing, though. You're going to hit resistance at these lines. You got to expect that. You're going to hit resistance at whole number lines. You're going to hit resistance at these support lines. That's not a reason to bail on a position. If you have a teeny tiny pullback, that's nothing, so you don't worry about it so much. How's the dollar doing? The dollar is a little bit stronger. That's not helping us. Oh, there we go. See that? So now my basis is below 39. Look how fast it shot up, 185. So now my basis is below 16,340. I could actually put a stop there if I wanted to walk away. And now I know I've locked in my profits. But as it stands, here we go, 195. Let's take it. There you go, 195. Almost 200 bucks on that one now. All right, so that, I mean, you can do that all day long. It's just, and certainly I encourage you to do it in a paper trading account and practice, practice, practice. Because amazingly, when you practice something, you'll find you'll get better at it. You'll start seeing these signals and you'll start learning it and understanding what you're doing better. It's really just a matter of practicing and of course getting a good gist of which general direction to go. So like when I'm, in other words, if you're going to be trading it, I made a bottom call here for our members in chat. I mean, that's what I do. That's my job is to watch the macros for you. And based on that, though, you can then move in and pick up a trade. All right, nobody has any questions on this stuff. Boy, I am either the best teacher in the world or you guys are sleeping. One of the two. Oh, wait. Something happened. I just got enough for one of my mortgage guys. Wow. Down. Yep. So the positive move in the market is positive enough that people are pulling out of the treasuries. So let's take a look at bonds. And look at that. That's what my note said. See that? That's nice. You want to see that. That means that there's a broad, the rally strength is building when you see stuff like that happening. So I have a trader friend. He texts me when something's going on in the bond pit. It's very helpful. All right, so then we're off the train now. We sold out with all cash. And now you want to say, okay, what's my next level of breakout? Well, I want to see 41.75 here. And if I see 41.75, then 15.8 on the Nikkei would be my next line that I think I feel comfortable holding. So now we're back to playing the Nikkei if we want to do it. All right, so we'll do one more trade if it works. So when we're watching the Nikkei, now we have to change our setup. When we watch the Nikkei, we watch the dollar, always watch the dollar with the Nikkei. We're going to pick one up at 15.8. We're going to watch the S&P at 19.15. We want to hold that, and we want to watch the NASDAQ, was the one we want to see. NQ. And I want to see the NASDAQ get over 75. Oh, wow, that was easy. So that now makes me feel comfortable about being in the Nikkei long. All right, so if these guys pick up and the dollar gets stronger, I want to see the dollar get stronger now. That's going to make the Japanese exporters happy. And see that? 75 bucks. What, 30 seconds, right? All right, so that's exactly what I expected to happen. Like I said, everybody stalled at their lines, but that's nothing wrong with stalling at your lines. The Dow doesn't have, the S&P doesn't have much resistance, but we're going to watch this 1920 line. That's obviously going to be phantom resistance. It's not technical resistance, it's psychological resistance at the 1920 line. The NASDAQ had both technical and psychological at 41.75, so it's great that it topped that. It doesn't have any real resistance now until 4,200. All right, so we're watching the dollar. We'd like to see the dollar get over 97.50. That would be fantastic for the Nikkei. But already it's looking kind of good. But now I want to see this 41.80 hold. Once you get a line, you don't want to give it up. So I'm watching 41.80 and it's not holding. So I got my finger over here on the Nikkei to sell. So I'm not going to give up my money. So I'm keeping an eye on that NASDAQ to see that it's making progress. And if it's not, then I get out. See the 14.1, that was a bad sign. Now it's 14.14, but there's nothing here. Up, 418. Come on, NASDAQ, you can do it. No, you can't. Come on, man. Yes! There you go. Now the money train leaves the station. Oh, no, you're kidding me. Really? All right, get out. Oh, there it goes. All right, made another $100. Oh, God, that's so funny. Anyway, so between the, was it the Dow? What were we playing before? All right, so yeah, between the Dow and the Nikkei, we're up $320, so that's not so bad. All right, so that's it. I mean, that's all it takes to trade the futures. Pay attention, pick the line, go with the lagging one. And the only tricks you need to learn, aside from the mechanics of watching this thing, is when to make the big call. Like when did we turn bullish? We turned bullish in member chat down here. Sorry about that. We turned bullish in member chat down here, and we turned technically bullish while I was talking to you guys. When we saw things breaking up, we said, "Oh, that's good. We're breaking up." And of course, you watch your news flow, and then you have to know the relationship to watch. So when I'm doing the Nikkei, I want to watch the dollar. When I'm doing the Dow, I want to keep an eye on oil because Chevron and Exxon are such a big part of the Dow that oil has a pretty big effect on it. All right. When you're doing the Nasdaq, you want to watch Apple. So if I've actively traded the Nasdaq, I damn well am going to keep my eye on Apple in this screen. All right, so if Apple is going up, then the Nasdaq's going up. If Apple's not going up, the Nasdaq's not going up. All right, and it's all practice. It's like me trying to tell you guys how to hit a curveball, right? I can talk till I'm blue in the face, but the only way you're going to really learn is to have somebody throw you a few hundred curveballs and you swing at it until you figure out, okay, here's the kind of swing I need to make to hit a curveball. So that's all there is to it. It's not out of your reach. It's just a matter, but the problem is people jump in with money way too soon and they lose their money because you will lose money sometimes. I mean, Christ, I'm down on that NG spread. What's my NGK, right? NGK. I mean, it's a 5-month play, but I'm still down $6,000 on it. So you're not always going to make money. I expect to make money eventually, of course. So you're not always going to make money, but you have to learn. And to learn, you should really just do it with a paper trading account and practice until you see yourself consistently getting those hits. And by the way, you see how easy it is to make money on the short thing. So that's why I don't care that this big trade is down, because it's so easy to make money doing the quickie stuff if you feel like it. And I could, by the way, be quick trading this guy to knock this down, but it's, frankly, this is a trade I feel very good about long term. So I can't stress that enough, how much I like this NJK 6 contract, which is the main natural gas futures at under $2, and currently $1. I'm in at 196. It's at $1.90. I don't like it enough to buy 10 more. All right, not now. So we're back down to at 180. 184. If it was at 184, then I could bring my basis down to 190. Then I would like it. So it had to be all the way down to 184 before I wanted to buy 10 more. So that's probably not going to happen. I very much doubt it's going to go that low. Meanwhile, I expect it to hit 250, and at 250, this thing will make about $50,000. So that's what this trade is for. That's why I don't really sweat the fact that it's all relative. That's why I'm down 5,000. It's 10%. So I'm not upset about being down 10%. But you do lose. That's my point, though. You will lose money. It's very easy to lose money in the futures. Even if you do everything correctly, something can still go so far against you that you can't help it. You got to learn to take quick profits, get in, get out, get back to cash, re-look at the whole thing, look at the big picture, step back, and then find the next right trade. And it's all discipline, and you're never going to get it by jumping in and trading right away. You're going to get it by practice. But it's worth it. Okay, when I retire, this is what I'm going to do. I'm going to wake up in the morning, I'm going to trade my futures, I'm going to see how much money I have to spend for the day, and I'm going to go out. End of story. Hey, if I can make $500 a day, I can have a very nice day every single day that I'm retired without dipping into my savings at all. That's not a bad plan, right? All right, guys. So maybe I should go over NGC. I did that without even looking at your question. So it's still, there's nothing wrong with it. Natural gas is what we still like. And CL and RB, no. Oil is not really tradable here. Okay, neither is gasoline. They're both in the middle. They're both in the middle of a range, and there's no particular reason to trade them. They're trading on rumors right now. Take a look at dailies. Okay, that's in a tight range. If oil's at 35, probably you want to go short. If oil's at 30, you want to go long. Very simple concept. Gasoline, I like it long over $1. But more so, I like it long back over here. Same thing, though. Look at this range, how tight it is. And oil here, it's a range. So at 30, I like it long. I expect it to go back to 35, but then when it gets to 35, I'm going to like it short again. Natural gas, look at this. This was the low before it hit 250. Now it's back here. I'm not stupid. I see what happens. I'm going to go back in here, even though I'm a little bit wrong. I sure as hell didn't want to miss this. So I started buying it when it started going below $2. Now it went a little bit lower than I thought it would, but not lower than I thought it might, because of course it might go back down to where it was. Now, by the way, this is the front month natural gas contract, not the one that we're actually playing. We're playing the May contracts. But still, conceptually, this is the bottom. It's a normal bottom. It's no problem. It's part of the normal little range it trades in. And you have to respect those ranges and learn to play them if you're going to be a futures trader. All right, so we're going to wrap that one up here. That came right on the button, an hour and a half. I feel very proud of myself. Thank you all for coming, and we'll do this again next week. All right, appreciate it, guys.